So moving on, we'll now come to books and records provisions. This is another important set of provisions. These provisions are, implemented by another regulator called SEC, Securities and Exchange Commission, which is basically the stock market regulator, which governs the listed companies and their transactions. It is similar to SEBI, but I would say much more evolved, stronger and empowered regulator. And SEBI is moving in that direction, I must say. It has wide powers to audit books of companies listed in the US and take punitive actions. Again, under books and records, there are two important sets of provisions, which are, if you go by the language of the law, applicable to the issuers of securities, which means the listed companies, but by interpretation, their Indian subsidiaries will also come, into the purview. Two important provisions: to maintain accurate and truthful books of accounts, and to put in place a strong internal controls that should result in prevention of bribery. Now, again, we will go through the details one by one. The accounting rules, the first set of rules basically say that, the US companies or subsidiaries are supposed to have, proper books of accounts, depending on which accounting system that they follow, but it has to have a proper and clear books of accounts where every single transaction must be properly narrated. And every transaction that happens, there has to be a detailed narration of that transaction, reasonable details. So it could be a free of charge product, it could be a heavy discount, it could be a traveling expenses, it could be some hospitality, it could be sponsorship, it could be a charitable donation, whatever, right? There has to be a clear narration of that, and it is expected that company should call a spade a spade. Company should not disguise expense A in the name of expense B, because it might look more acceptable in the eyes of auditors. They are expected to have clear narration of all the transactions that are there. And the second important provision is internal controls, which basically require that there should be enough internal accounting controls that should result in two outcomes. First, that these controls should provide reasonable assurance to an auditor, investigator, or a regulator that whatever the code of conduct and internal policies and procedures that are put in place by the company to examine and monitor and administer all the expenses and financial transactions, there is a clear control mechanism of prior approval, recording, supporting evidence, etc. That reasonable assurance must be provided to the auditors. That much of credibility the books of accounts must build, the internal control system must build. And secondly, the books of accounts must be accurate. And I will repeat, when I say the accurate, in theory, if they give a bribe, they should call it as a bribe. If they give a free product, they should call it as a free product. They should not disguise A as B. And how this will help? This will help because, as I said, sometimes historically in the past, some companies had demonstrated this tendency that I want to keep my compound clean and I would like to put the garbage in my distributors or third parties compound, and creation of slush funds or cash in the books of a third party who's representing the company in the market, that is done, and then that cash is then utilized to make improper payments. So this cash is sometimes generated by asking the contractor, distributor, third party, or service provider to issue fake bills of travels, purchase orders, work orders. Companies sometimes give heavy discounts so that there is enough profit margin. Sometimes the expenses are recorded in the wrong way. Sometimes there are not sufficient supporting documents, and somehow this results in creation of cash. Now, when a company gives a free of charge product, which is not meant for free of charge, but you sell it and then you make money and use that money. When company gives a heavy discount, which is not in the course of normal discount policy, when company approves a fake travel bill, then at a company level, the internal control is not working properly. And then there is a job of respective stakeholders within the company to make sure that internal control is working properly. Because if it works properly, then it would avoid the risk of creation of slush funds or creation of cash in the books of third parties. And if it is not created, then obviously misuse of that cash, the question of that improper transaction does not arise. And therefore, the internal control is supposed to make sure that it prevents the risk of bribery. And these are the two important accounting provisions that you can see.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000+ laws and 24,000+ compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.